This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. It's 2221, show number 200. Yes, you're hearing that right. We made it to 200. Hard to believe. And I don't know if this is a special day, Nick, other than the fact that we made it to 200. But it seems like the markets are shrugging off reality and just moving on and just going up, up, and away.
Yeah, for a second day in a row, we're seeing a market rally. The catalyst seems to be the unraveling of the short squeeze stocks like GameStop and AMC and a bunch of others. And as these stocks have come down, the markets have actually moved higher. So it looks like the markets are rejoicing that things are back to normal. But are they really back to normal? I think not. But either way, markets are higher, the major indexes, that is. But we're seeing a big slaughtering going on in GameStop right now. The stock is down to $86 a share. Just think about it. A few days ago, it was up almost to 500, actually hit 500 in the pre-markets. Now it's at $86, down 62% as we speak and cratering.
Hey, well, we knew this was going to happen, correct?
Yeah,
because
absolutely.
Eventually the short squeeze would end. They would get capitalized, recapitalized. They had to take their losses. They took them. And now the people who got in, like the guy with the board on Reddit, he put in 750,000. It went up to 16 million. Eventually those guys are going to take profits. And there lies the flaw in their strategy. Yes, they can overwhelm the shorts on these stocks short term, but eventually they're going to take profits, and then the stock is going to drop to its intrinsic value, which in GameStop, basically you probably have to pay me to take it.
The funny thing is that, people knock the shorts, and, this was the little guy against the big guy, David versus Goliath, and all of this stuff. But the reality of it is the pattern went parabolic 4 days ago. When you get that pattern, it's going to come down in a parabolic way as well. And, we'll see where it winds up, but ultimately probably goes back down to, $10, $15 where it was, before the big run. It was a mastermind genius plan, that they were able to capitalize on a stock that had 140% short interest there. So, that was a tremendous plan. And again, like anything else, and we talked about it, you got to be crazy not to take your money off the table at $300, $400, $500. You have to take it. That's just good business sense. And now we see the stock, trading, in the mid 80s right now.
Yeah, mid 80s. And when you think about that, it's really quite a move there from very low to 500 back to mid 80s. That could give you vertigo. It's not the kind of position you want to hold overnight or on the weekend, right?
No, not at all. But there were people, I suppose, that were in it, early. And like any good run up, you can wait for it to go parabolic, but you got to get out. And, this is just something that we talked about. Eventually it would correct itself. And it's done that today. And it actually started even in the last 3 sessions. But, it just goes to the testament of the pattern. When the pattern goes parabolic, that's it. It's on borrowed time and it will come back in. The one thing I will say, though, seeing all of these types of moves, this is not really your healthiest market out here. These type of moves happen, around market climaxes. And, you get all these absurd things. I used to call it a dash for trash, and I still call it that because that's exactly what it was. But you see, a dash for trash in every bull when it's a late stage bull. So, I think traders going forward have to be a little bit cautious. But, right now the major indexes are getting a good bid, and we'll see how long that can last.
Yeah, the dash for trash, and that's kind of funny when you look at it. But and look, gold and silver getting slammed today. I think that's the big boys just saying might work on GameStop. It ain't going to work on precious metals. But it seems to me that the most vulnerable aspect of silver isn't the retail market where you buy it by ounces, because that's for small investors. investors, the coin shops, etc. No, the biggest vulnerability is SLV, where for every share purchased, they got to get more silver in there. And in theory, at least, and we're to believe the powers that be, in reality, on Friday, they added 30 million ounces to SLV. That's pretty unreal, isn't it?
Yeah, it's rather remarkable to think about it in those terms. You know, when you have an ETF that really warrants the purchase of the physical metal, and they have to take delivery of it. I don't know where they store it, but I will say that you're 100% correct. You know, when that SLV really makes its move, I mean, these guys have to come in and have a percentage of that actual silver in there. So that's interesting in and of itself. I mean, in my opinion, is silver still going to go back up? Yes. It just might take a bit more time. So, you know, you sit back, you wait, you watch these chart patterns, and, you know, it was a little bit abnormal, honestly, to see the big move yesterday. I guess over the weekend, there was a big squeeze in silver, and there was a viral video going around. If everybody owned 2 or 3 ounces or 4 ounces of silver, you know, the banks, it would put the banks out of business and all of this stuff. So the reality of it is silver, when you look at it, the central bankers are going to continue to print money. They're going to continue to go out there and you know, have to support the markets with all of their money printing techniques, and that's a bullish case for gold and silver at the moment. You know, we watch the chart pattern, and when it tells us that the move is going to go up, then we get involved. But the trend is still up. I mean, you know, this technically just, you know, it wasn't a really good setup for a breakout just yet. So, you know, I have no problem seeing silver pull in. I own a lot of silver and gold bullion personally, and again, I'm not getting rid of 1 ounce if it's at $50 or if it's at $5. I think that's the ultimate insurance policy for anybody in my type of business.
Yeah, and that is a good question. When was the last time somebody holding silver actually sold some off?
Yeah, I couldn't tell you, but I definitely know that people, if it goes high enough, will do it. You know, they may want to purchase something, or they, you know, you will get some sellers there. But for me, you know, I've been a long-term holder. It's the only thing I've held long-term in my life. Other than that, I'm a swing trader. I'm in and out, you know. So for me, gold and silver are my long-term holds, because I feel that they are the ultimate insurance policies. I know a lot of people will disagree with me, but I sleep better at night owning them. I sleep better at night having that metal close by where I can take possession of it. And, you know, God forbid we ever go into a situation where, you know, you become a Venezuela or a Cuba type economy. You know what? People will be happy to take my silver.
Yeah, could not agree with you more, man. And hopefully we'll never see that day. I do think that these metals are going to have some involvement in the next monetary system, because when this thing crashes out, and it's going to, don't ever think it's not, it's gonna. When it does crash out, nobody's gonna really trust fiat currency again for decades to come. And Nick, I just go back to the Great Depression. People have such short memories. With all the bank failures during the 30s, it was many years before people trusted banks again. There were a lot of people that just used their checking account to pay people and kept their money under the mattress, and that's one of the places where that term came from.
Mm-hmm. That's very true. Even, you know, I remember my grandfather didn't really even trust a bank. He would, you know, keep anything that he made basically in a hidden spot in the house. You know, it wasn't until banks really paid out a decent interest rate that people started to, you know, move back into them and put their money there where they felt secure. Another thing that people should realize too is that, you know, owners of silver and gold, they had their gold confiscated, I believe in 1932 by FDR. So, you know, they had an IRS agent at every single bank in the country. And if you went into your safety deposit box and you went to, you know, take out your gold or silver, they were right there to confiscate it. Now, they did give you some money for your gold and silver, but it wasn't really what
$32.
It was. That's right.
And 35 they gave you. That's the fact.
And the price was a lot higher, you know, after they were done with that program.
Yeah, because then the whole reason he confiscated was to devalue the dollar and raise the price of gold to 42, I think it was. And of course, it had no real effect, but that never stopped a politician Right. That does never stop the politician from doing stupid things.
Politicians have done it before, and history has a tendency to repeat itself. So again, I think a lot of people now this time around are not really looking to place their gold, silver, or any precious metals that they have into a safety deposit box.
There's no trust in the system, and that really is the problem. We'll know the next disaster is upon us, Nick, when the banks stop trusting each other again, and they won't take their promises as collateral. That's what happened with the repo crisis. I guess we've all forgotten about the repo crisis, but it will happen again. That's the case for precious metals.
Well, I think the move to we keep hearing that the euro is going to go digital, and a lot of other currencies, including our dollar, could go digital as well before we know it. And that's ultimately the way that they're thinking. There won't be another run on the banks. So it'll be quite something to see somebody limiting you with your money, how much you can spend a day or how much you can use a day if you have to have it digitally. So there's a lot that's going through right now. There's a lot that's happening right now. I think people need to be aware of all of this. Do your own homework. Don't listen to myself and Kerry. Just do your own digging, do your own due diligence, and that ultimately will help you make a decision. But for me, gold and silver have been two vehicles or those metals. And I keep a 10-ounce little bar on my desk just for a reminder every day that's the ultimate store of any kind of currency. It has been since biblical times, and I believe it will be till the end of time.
And I keep a silver bullet on my desk, a 1 ounce. It's exactly shaped, cast in the form of GIS, probably a 9mm bullet, and that's what I keep, because in the end, that might be all we have is our bullets and our guns. Hey, in any event, make sure you go over to inthemoneystocks.com. The trade of the decade is right around the corner. Could be just a matter of days. You want to go there now and check out the Twitter feeds. We have at ITMS, at Nick Santiago01, at Kerry Lutz. Send us your emails. We'll get to them shortly. That's KL@KerryLutz.com. Saving them up for a couple of days. Anyway, Nick, enjoy the rest of the day, and we will pick up tomorrow.
Sounds good, Kerry. Thank you.
And so concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. Be sure to go to his website, inthemoneystocks.com. Don't forget the Twitter feeds at ITMS and at Nick Santiago01.